Welcome to the world of bookkeeping. Have you ever wondered how to set up your chart of accounts? It's crucial for managing your business finances. Your chart of accounts serves as the backbone of your bookkeeping system. Think of it as a categorized list to organize all your financial transactions. Every dollar coming in or going out aligns with these categories. Most small businesses begin with 5 main groups: income, expenses, assets, liabilities, and equity. Income shows what you earn. Expenses reflect your spending. Assets track cash, equipment, and inventory. Liabilities represent your debts. Equity shows your investment in the business. Don't overcrowd your categories at first. Start simple and add more as needed. A clear chart of accounts allows for better reports and decision-making. Consider using accounting software. Most software provides default charts designed for small businesses following standard U.S. practices. This can save time and be customized as your business grows. Now, let's discuss cash versus accrual accounting. Cash accounting records income when you receive it and expenses when you pay. It's straightforward and ideal for many small businesses. On the other hand, accrual accounting records income when earned and expenses when incurred, even without cash movement. This method offers a more accurate performance picture. Many new owners find cash accounting easier. However, if your business expands or deals with invoices frequently, accrual might become necessary. Once you choose a method, consistency is key. Mixing both creates confusion and inaccuracies. If a switch is needed, consult a professional. Establishing daily and weekly bookkeeping habits saves time later. Daily tasks include saving receipts, recording sales, and ensuring transactions are accurate. Even 5 minutes a day keeps your books up to date. Weekly reviews help catch errors. Check your bank balance, scan for duplicate charges, and confirm correct categorization of income and expenses. This minimizes surprises. Always keep personal and business finances separate. Using a dedicated business bank account simplifies bookkeeping and avoids tax filing issues. Embrace automation. Use bank feeds, receipt scanners, and automatic categorizations. But don't skip the reviews. Regular checks are crucial to ensure accuracy. Finally, let's talk about common startup mistakes. Don't wait until tax season to organize your finances. This can lead to missing records and unnecessary stress. Be mindful of cash flow. Profit doesn't equal cash. Always set aside money for taxes to avoid surprises later. And remember, it's okay to seek help. Bookkeeper or accountant can provide valuable insights and assistance. Building a strong financial foundation is essential. Good accounting habits lead to better decisions and reduce stress. Start simple, stay consistent, and review your finances regularly. These steps prepare you for long-term stability and confidence in your business journey. If this video helped you understand accounting a little better, don't forget to like, share, subscribe, and turn on notifications for more accounting tips and guides. See you in the next video.